Why did I get out? Typical day. Typical day. All right. Good morning, everybody. Louis Borsellino, man over market. That was me choking my nephew because I got out of my positions and I should have. I guess it wasn't his fault. It was mine. But anyway, let's start out with our disclaimer. And let's start out with the disclaimer and we'll go this way we don't get sued. Trading futures, options on futures and retail off exchange foreign currency transactions involves substantial risk of loss and is not suitable for all the investors. You should carefully consider whether trading is suitable for you in light of your circumstances. Knowledge and financial resources, I'm sorry, in light of your circumstance, knowledge and financial resources, you may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results, and the following information is an expression of our opinions and is provided for educational purposes only. All right. Now, for all you people who subscribe to all of those luminaries out there and you watch Bloomberg and CNBC and so on, go back and read my bond commentary that I wrote back in January, and I predicted there'd be no rate hike this year. None. They had, look, they're paying the banks on the Fed funds now, on their reserves. Check it out. The banks are making money on the reserves, and that's why they're not lending money to the little guy. They don't need to. And instead of paying the Treasury the money back like they should be, they're just paying it to the banks to keep the rates right here at zero. That's what they want, zero rates, because the government's in such debt they couldn't afford to pay it back if it goes up. So you don't have to listen to all those Harvard professors, all the MBAs. It's a very simple answer, okay? They can't afford to pay it back, all right? And that's the end of the story. No rate cut. So now we're back to what's going on in the world, and we're going to have to end up understanding that right now we have a global slowdown, no inflation, Chinese slowing, second biggest economy in the world. They're slowing. We are, and I've said it a couple of times now, in the whole dirty laundry, the United States is the cleanest shirt in the dirty laundry. So that's why people are actually buying our bonds, because they see us as a safe haven. It doesn't matter that we're earning nothing on your bonds. They need safe places for their money, right? So I was in New York about a month ago, and I saw 100 cranes that are building skyscrapers, building over train stations, over air rights. And what's happening there? Funny thing, I'm walking down Central Park with a colleague, taking a look at all the new condos, but all the buildings are dark. They're all dark. No lights on. I'm going, where's all the lights? There are people in China, Russia, in Europe, buying condos sight unseen so they can get their money out of the countries, putting it in United States real estate. That's the state of the world right now. So with that and my lecture, I'm going to get into what's going on in the markets, start sharing my screen right now. Actually, we are now working with our new Ninja charts, and got a little bugs in them, but we are going to have them worked out thanks to my buddy and partner Pat Tabbitt. He's doing a great job. All right, so we got the S&Ps right now. We are down. Let me see here. ES is down 2,300 points right now. Okay, so take a look at the overnight. Let's go look at the overnight profile. We got a high of 1983. We've got a low of right here, and it's unfinished, and we're actually testing lows here at 1953. All right, So, you know, we had a 2-day rally that actually took us up to 2012 yesterday after the number. All right. And I've been thinking that the market had gone, you know, up, right? Too far, too fast, not enough trading. Remember, I tell you when we get these trend days, and you know, I'm looking for the market to retrace back into the 1924 level. Remember, we had these virgin VPOCs down here that we talk about all the time. So, and I said it before the Fed that I ultimately thought the market was going down to 1932, 1927, this area right in here, right? And let me see if I can move this over a little, and we can see those. You know, I'm still getting used to this thing, right? So right over here, we have some virgin VPOCs right here. All right, we got a virgin VPOC 1940. It's a 1943, and then we have some more over here on this to the left of this. I'm still getting used to the new profile. I'll get it straightened out and be able to show it to you. So I kind of think that the market is gonna trade back down into the low 1920s, and as we see here, we're still going down right now, and we have some single prints from the other day, right? So we've covered these D's, all right, and so we got some single prints down here at 1945.75 down to 1943 half, okay? So currently trading at 1950, all right? So I'm just, you know, taking a look at the market from the point of view that, you know, we're back to, all right, the Fed is done. And everybody's been saying, let's get rid of the Fed. Let's get it out of the way, whether they raise it or don't. Let's get it out of the way. Well, they didn't. So now we have to deal with what's going on in the world and the economy. And what's going on in the world and the economy is the fact that we have a little global slowdown going. Let's take a look at today's value area high and low. So in our new charts, we're still coming, you know, we have our CCI, and we have all our different indicators on here, which I will be going over, and we're going to start doing webinars on NinjaTrader and their ecosystem. So value area high day is 1994 half, value area low is 1979 half, point of control is 1979, okay? Here's our VWAP, right? This dotted line here, okay? And then well, this is sort of a moving average, but it kind of gives you the overall sentiment. See how if it goes from red to green, it's just smoothing a bunch of averages and kind of smooths out. And right now it is telling us that the market is going down, okay? This first line is two standard deviations from the VWAP, and the third one is the third standard deviation from the VWAP. And this is our 5-minute pivot, actually sitting at 1964 half. So we need the market to get above 1964 half for that to actually start thinking about the market going the other way. So, you know, we had this big run up. Everyone thought they were going to get, you know, the people that knew that there was no rate cut played the run up, got out yesterday, and now we're back to dealing with the, you know, the life of what's really going on in the economy, right? All right, so right now the market, our long-term and short-term sentiments are bearish. As you can see, you got the red line down there, okay? Remember, this line doesn't go from green to red. It goes from green to gray to red. It's gone from green to gray to red, and it's been red all night. And we have the 5-minute pivot. Could be a day that will, you know, let's check out the first 2 periods of the day today. And if we start getting some drastic move to the downside, it could be a day of retracement down to the mid-20s. That's where I'm looking at to go, 1927. And actually, we need more volume down in those areas, right? So looking for a retracement to the mid-20s. Now, remember, it's Friday, and typically Friday has been setting a range in bracket B and bracket C, and then spending the day being contained inside bracket B and bracket C. Don't get yourself chopped up. It's been an incredibly, painstaking Fridays, and it's been sort of aggravating for myself because you have a good week and then you end up giving money back on Fridays. Okay, let's take a look here. This is TF. Okay, and so we got the Russell down with the 5-minute pivot sitting at 1168. I've got the Dow, the YM, and our 5-minute pivot at 16,440. So I'll leave these on the screen and for you, so you can take a look at them. And we got the NASDAQ down with its 5-minute pivot sitting at 43.40. Now remember that these pivots, and you can see that they are all in a negative mode. See there's CCI and so on. So for all you people, the nice thing about our new indicators, they're not new, but now on NinjaTrader, that you can use them for any market. These will work on any market. We make a little tweaks, but they will work on grains. They will work on any other markets that you're trading, currencies or whatever, bonds. I'll bring in our bond chart shortly. And we've created profiles for all of them. Over the weekend, we got some work to do, and we're going to create some more profiles. So remember, we got all the sisters here. So we have the market moving the way we, all in one direction. I think because of the sell-off, you may get a little bit of retracement, right? Look for a little bit of pullback, little short covering pullback, and then if we don't violate these 5-minute pivots, then I'm looking for the market to continue to go down south. All right. So let's take a look at what's going on in the rest of the world of commodities. So what's gold telling us, right? We got gold currently up. Let's go over here. Bring my little chart down here. A nice little feature NinjaTrader, right? Gold's up $8 from the close. $8 from the close. We got gold sitting here. Bull bear zone 1129.60. Top of value 1121.16. Point of control 119.60, and the bottom of value 1117. Gold, the total opposite of what's going on in the equity markets, which you should expect, because Janet Yellen yesterday said there is concern about the global economies. All right, not inflation. Now remember, demand product. Gold's been a little bit oversold. It's not a risk, not a hedge against inflation, but I'll tell you what, it may be a hedge against global slowdown and some defaults besides Greece in the Eurozone. Okay. Japan's got his issues. China's has his issues also. Well, China, you don't have to worry about that. Just keep paying their people less money, right? We'll see. Anyway, so taking a look at that, we've got the gold. This is what I would, after listening to how hawkish Miss Yellen was yesterday, I would expect gold to rally, right? You expect it because it's a hedge against any sort of disaster that's going on in the world, right? So I still think gold's in a downturn as far as ultimately, because now that she's stated what's going on, people have to digest it, and then they're going to have to say, well, is the world really melting? And then we're going to have to come back and say, oh no, it's just a time of crisis, and we'll get ourselves through that, right? All right, bonds. Okay, here we are, bonds trading way above value. Value already high of 153.20. We got a bull bear zone, excuse me, of 153.19. We got a point of control 152.04, value area low of 152, all the way up to 155. All right, getting a little to the overbought, but the slant of the and we got to make that switch on the oh no, I'm sorry, here it is. The VWAP is going up. We're at 1 standard deviation. These yellow dots are exhaustion dots where the market should start slowing. Okay, and then remember, this is 2 standard deviations from the VWAP. But as it's all still pointing up, these markets will move accordingly. So, look, with that news yesterday, maybe October, maybe not this year. I'm thinking any kind of bad news, these rates, look, the more people that buy our bonds at this rate, we don't have to, outside of QE and our own banks buying the bonds, the more people buy our debt, we can keep lowering the rates on our bonds, the more dismal it looks for the people, for other entities who want to buy the bonds, i.e. Germany, China, Japan, Russia, anybody who wants to buy the bonds. I'm sorry, not Russia, but anyway. So I think that you're going to see the 30-year head back towards the 160 rate, All right. I know we have a delay, so I'll kind of leave these on there for you. All right. And make sure if you got questions, get them into Anthony and I can address them.
You ready for one?
Yeah. What do you got going?
Will rising gold against other currencies also drag it up against the USD?
Rising gold against other currencies. Well, the strong dollar is, it was funny because listening today, usually the strong dollar is good. And right now the US dollar being strong is hurting the US economy because of exports. But I think that the strong dollar is not going to affect the price of gold. I think gold is just being a hedge on the instability in the other economies. So I don't think it's going to affect the dollar. I think gold is. I would not want to play that spread. I think that remember, I think gold's a demand product, and it's in demand right now because the strong dollar is hurting the other economies and ourselves, but that doesn't mean that there's other issues that are deeper than the dollar being strong. Hopefully that answered the question.
So,
okay, oil. Let's talk about oil. Oil once again on the way down. Remember, I told you I'm trading this from the short side. All right, we got the value area high from 47.26, point of control at 46.95, value area low 46.66, bull bear zone at 46.63. We're trading below value as we speak, making new lows. We are in the red, and I just think, look, I said this yesterday. I told you I was at a conference, and it doesn't matter about production anymore. It doesn't matter about production. They're going to have to produce at no matter what price. If that's all I am is a supply side product, and I'm going to produce it, and I'm going to sell it, and I'm going to sell it no matter what price it is, and I'm going to generate some revenues, and then I'm going to worry about the shortfall between my revenues and my debt, right? Because at the end of the day, all I need to do is adjust for my losses. So if I stop producing, and it's my only trick in the bag is producing oil, then I have no revenues. So you take the revenues, take the debt, do a reorg, and put off your creditors, and you restructure. That's what the world's about, restructure, right? Okay, so as you can see, CCI crossed over. We are in the negative, getting to the little bit of the oversold right now, okay? But when these lines are pointing straight down, that means they are still on the way down. So we're trading below value, and I think that the hawkish remarks about the global economy and slowdown is also causing the price of the commodities to go down. Here we are already down to 1944. Okay, I am looking for the market to move to 1934, 1927. I've been looking for. Let me see if I'm learning with the new profile like you are. Let me see if I can get that split there. It's already been split. Here's a low of 1935, and I know I have some. Let me just see if I can get to them. I might not have enough days in there. That's what I need to do. I need to put more days. Anthony.
Yeah.
So if I want to click here, where do I go to days? Data series?
Yep.
Go see.
Right there. Days to load.
Days to load. It says 5. Let's try 10. I'm going to go to 10 days. Let's see if that, it might take a little while, huh?
Okay.
We'll stay on a minute. So you're going to see this computing on your screen. There we go. There's 10 days. Here we go. We still have some glitches to work out, but we'll work them out because we have a superior team when it comes to figuring out computers, I guess. All right, here's the naked VPOC right here I was talking about at 1933.75. Okay, here's a naked value area low we're looking at, right, at 1930. All right, and then we got all these little single prints down there than in 1920. So I ultimately think that that's where the market's moving down. And I said that a couple days ago, and you know, it rallied 3 days in my face in light of the movement. Here we got single prints from 1945, which we've already talked about, down to 1943 hash. So from a profile point of view, I think there's some retracement down there that we have to get to. So any other questions?
Nope.
All right. I hope everybody's enjoying the new charts, new programs coming out, trading funding, our trading manual. We'll be selling the indicators and the manual separately. If you got your own dough, you don't need us for funding. Awesome. But we'll sell the indicators and we'll let you get into our trader education. We're just working out pricing and restructuring our website. So everybody have a wonderful weekend. I am on my way to Coastal Carolina. Wait, I gotta stop sharing my screen here, right? Stop sharing. How do I get to that? Your screen sharing. Stop. There we go. Leathernecks, we're on our way to Coastal Carolina to take on the #1 school in the FCS. Hopefully we will fare better than we did against the University of Illinois. I think we will. Coastal Carolina actually has been in the playoffs and lost to North Dakota, who's been the national champs 3 years reigning. So got a nice trip with my wife and our dog Ginger. I will be driving 12 hours down to Coastal Carolina today. I will be leaving early, and you will be in the good hands of Pat Tavin and Anthony Borsellino and Chris Kahn and Charlie and every member of the team over here at Manover Market. And we are excited about the new things we have to roll out. And we thank you for your following, and we will talk to you later. So go Leathernecks, and we'll talk to you later. Talk to you later. Have a good weekend.